Hello friends, welcome to our digital blogger. Today we're going to talk about how to start trading in the stock market. Since you're watching this video, let me congratulate you first, because this decision of yours of trading in the stock market is far better than some of the other options you could have chosen. Trading has conventionally shown a returns in the range of 15 to 20% if you're doing things smartly and at the right time. We will talk about some of the specifics on how do you enter the stock market. At the same time, we'll also talk about what are the common mistakes people do and how can you avoid them. Now, without further ado, let's quickly jump right into the topic. Before you want to start trading, you need to have a trading account. And to get a trading account, you need a PAN card. In case you have a PAN card, that's great. But even if you don't, getting a PAN card these days is really easy. You just need to go to the NSDL website, provide your details there. Along with that, you will need to send some of the documents such as an ID proof, an address proof, a date of birth certificate with 2 passport size photographs. So these documents need to be sent to the income tax office and you will get your PAN card within around 15 days to the residential address you have submitted. Once you have a PAN card, now it's time to move on. You need to choose a stockbroker that suits you perfectly. A lot of people ask, which is the best stockbroker in India? It really is a very flat question, but honestly, the point is simple. There are no best stockbrokers, there are only stockbrokers that suits you. Some people might want brokerage charges at the lower end, while other people have expectation on a high-performing mobile trading app. Some people want quick customer service, while others may ask for regular market research reports and recommendations. So it already comes down to the point on what exactly your preferences are or your expectations are from the stockbroker. Once you've narrowed down on your preferences, it becomes really easy to finalize a stockbroker. However, in case you need some sort of help or guidance in finalizing a stockbroker, you can see a link at the right part of the screen now. This video basically helps you out in finalizing a stockbroker for yourself based on specific parameters or preferences. Moving on, once you have finalized a stockbroker, you need to go ahead and apply for a trading account. Opening a trading account is easy again. You need your PAN card, an address proof, a passport size photograph, bank statement which can vary from 3 months to 6 months based on the stockbroker, and then finally you also need a cancel check for the bank details. A stockbroker might also ask you for an initial deposit, also called margin money. So this margin money will be able to decide the specific brokerage charges you are going to pay. But it again comes back to on what kind of stockbroker you have chosen. Once you have applied the trading account, you need to wait for a day or two and you will get your credentials and the client ID. Once you get the client ID, congratulations. You're part of the trading world now. But the next step is a super important one. You need to go back to the drawing board and start studying from ground zero. You can look at some of the books written by the greats of trading and investing. Some of the references we are making here. How to Make Money in Stocks by William J. O'Neill. The Winning Investment Habits of Warren Buffett and George Soros by Mark Tier. Now these are a couple of books that people have read over and over again, especially if you are a beginner. They will probably help you to get settled into the stock market and understanding it. At the same time, keep an eye on newspapers and journals on trading and investment. There are a lot of online materials these days, but be sure that the material that you are consuming is a trustable one. There are seminars and webinars organized by stockbrokers every now and then. Be wary of the fact on what's exactly happening in that particular segment. You can check out on YouTube channels and subscribe to them and keep a regular habit of learning. Once you do that, you'll get a hang of it. This will become part of your habit, and then you also need to make sure that you are following the market. Theoretical knowledge is one thing. At the same time, you also need to understand what are the market dynamics on a regular level. You need to have a quick eye on some of the TV channels such as CNBC TV 18 or probably NDTV Profit. There are Hindi channels available as well in India that you can look out for. Similarly, there are some journals such as DSIJ or some newspapers such as Business Standard or Economic Times. Keeping a close eye on all of these informationary materials is a good thing. But at the same time, do make sure all of this is a secondary source of information for you. Your fundamental or technical analysis is your own responsibility. further, once you're ready, you need to go ahead and create your strategy. Before you go ahead and do that, you need to ask this very fundamental question to yourself. Are you looking for short-term quick profits, or is it a long-term gain? If you're looking for short-term quick profit, then you are a trader, and the overall strategy is going to be based on technical analysis, which is very different from a person who is looking for long-term gains, because every analysis is based on the fundamental setup of different stocks and companies. You might come up with something really absurd as far as your first strategy is concerned, but at the same time there will be a lot of learnings that you will gain over a period of time. This will definitely help you in the future, assuming you are not going to commit the same mistake over and over again. Talking about mistakes, let's check out some of them which you can certainly avoid. You should be open to learn, be it whatever channel, but the idea is that as long as you are open to learn, you will be able to reap good profits in long term. Planning or analysis is something very crucial. Either it is a long-term investment or it is a short-term gain. You need to put in technical fundamental analysis in place for yourself. Over attention media is definitely a concern for the simple reason, yes, people will say that this stock might go up, the other stock might go down, but at the end of the day, it's your decision, it's your analysis. Putting all eggs in the same basket might look like a cliche, but we just like to highlight the fact that it's a good idea to diverse your portfolio across industries, across stocks, and across entities as well. A lot of people go ahead and start borrowing money from their friends or relatives for stock market trading or investment. It's a very bad idea. You should definitely not do that. Borrowing and trading do not go together. So please don't do that. Finally, jumping on rumors. This is a very common scene. Your friend or your colleague might say that this stock is gonna go up or that stock is gonna go down. Well, you hear them out, but don't go ahead and place your trades based on that. You cannot sell or buy just what others are saying. You need to go ahead and go back to your drawing board and do your fundamental or technical analysis on yourself, and then finally make a decision from there. These are some of the mistakes people generally commit, and you can most certainly avoid. This is it about the video as far as how to enter into the stock market and start trading is concerned. In case you're looking to open a Demat account and are not sure which stockbroker to go ahead with, what you can do is you can check out our website, ourdigitalblogger.com/free callback broker choice. Provide your details there and we'll set up few callbacks for you based on your preferences. This is it for the video. Thank you so much for watching it. In case you liked it, please go ahead and press the thumbs up button. We'll really appreciate that. You can also subscribe to our channel, Our Digital Blogger. Thank you so much again. Have a great time. Bye-bye.